All of the indices are currently in the red. Almost every position in my portfolio is down 1% or more. Amazon, for example, is down about 2.5%, but it's not a newer position to my portfolio. So overall, I have a gain of 38%. But today we're going to be talking about a newer position to my portfolio, which is FSPGX, the Fidelity Large Cap Growth Index Fund. Year to date, it's down 6%. Right now, I currently have about 83.9 shares in my portfolio, and I'm down 3.6%. This right here is what investing actually looks like sometimes. I'm not always in the green. Sometimes it takes time to see those profits, those gains in your portfolio. But I'm continuing building. Right now, I'm focused on getting this position up to 100 shares. And that's what we're talking about today. Why I'm still buying, what's inside of this fund that I'll be holding on to for the long term. So right now, the market has been under a lot of pressure. We've seen multiple weeks of our portfolios dropping, global tensions, a rotation into different sectors like energy is leading to growth funds like FSPGX feeling it the most. And I know how it is. I'm going through it right along with you, but the good outweighs the bad. I have many positions that I've been working on for years now. And so this pullback is only seen when I look at my daily returns. And I take the time to reflect back on previous war times and economic downturns to know what my portfolio could be on track to look like in 5 years. What I'm talking about today is investing, not trading. I'm building and staying focused on what my portfolio is going to look like in 10 or 15 years from now. FSPGX tracks the Russell 1000 Growth Index. It has a low expense ratio of 0.035%. The current share price is $43.43. And taking a look at the performance on some longer time frames, annual returns over 5 years, about 14%, 3 years, 26%, and 1 year, 14.75%. It gives you exposure to some of the fastest growing companies in the US, including NVIDIA, Apple, Microsoft, Broadcom, Amazon, and Meta platforms. It's a concentrated growth fund that I've decided to build up and pair with my S&P 500 investment over at Fidelity, which I'm holding, which is FXAIX. So when it comes to FXAIX, I have 749 shares, and I'm currently up 46.6%. But just back in January, I was up 51% with a gain of over $60,000. And right now, this position is up about $55,700. And my Fidelity fund year to date is down 1.62%, less than FSPGX, which is down about 6%. This is because FSPGX is, as I said, pure growth, heavily concentrated into those mega cap tech companies, while FXAIX is the S&P 500. It's going to include energy, financials, industrial, healthcare. So it's going to give a blend of growth, but also value stocks. So I'm incorporating this for the growth, but I also have positions in my portfolio that give me that stability that I also want. For now, I'm going to keep on buying. I love the low expense ratio, the long-term performance, and the exposure that it gives without me having to hold individual stocks in my IRA. While no one can predict what the stock market will hold in the future, analysts expect 2026 to be a year of AI spending, which will turn into AI revenue for software and cloud companies like Microsoft and Meta down the road. And right now, a lot of people have been shifting their money into energy, giving us an opportunity to build up our tech positions and be ready for the future when potentially the shift goes back to technology thriving. I'm sticking to my strategy, continuing to build towards my first 100 shares and then 150. So I'm going to keep on building up my position on a regular basis and put in those limit orders so I can catch those low prices even if I'm not sitting down watching the charts. So I'm sharing this so that you can see that volatility can be a part of growth. So I'm going to keep on building no matter what the market is doing. If you're not already, consider joining my channel membership. Check out the details in the description. Make sure to like, subscribe, hit that notification bell. Let me know what growth positions you're working on when it comes to your portfolio. Here's a quick reminder of a few growth ETFs that you might consider if that's a better fit for your portfolio. All have similar expense ratios and dividend yields, as well as performance. And those are VUG, SPYG, and SCHG. And here's a look at the 5-year performance when it comes to all 4 of these funds. So that's it for today. I'm sticking to my plan, being consistent, and of course, being patient. Thinking about the long term when compounding will be doing its work, the heavy lifting when it comes to my portfolios. So leave me some comments. Let me know what type of pairings you are doing when it comes to your portfolio, similar to my FSPGX and FXAIX. Don't forget to check out my referral link for the MooMoo investing app. You can get 8.1 APY on your uninvested cash for the first 3 months and other great benefits. So check that out. Like, subscribe, hit that notification bell. Like this video. Thanks for watching. Okay, bye.